Hi, good week to all. I hope that you have a great weekend. This is Kelvin here. Welcome to this week edition of the weekly technical outlook on the major stock indices. So, as usual, I'll be covering the latest key levels to watch, the trend buyers on the SPX 500, the Nasdaq 100, the Hong Kong 50, which I believe that everyone is pretty conscious about given last week's pretty much dramatic decline of close to 5% on the China big tech stocks, then Japan 225, as well as the German 30 index for the week of 23rd of August to 27th of August. So before we start, let's take a look at the disclaimer slides first. All right, so let's take a quick look at the raw momentum or the momentum, the performance analysis based on momentum, strictly on momentum only, on the weekly performance of last week across the globe on the major stock indices versus their prior weeks. So last week's more or less is kind of a consolidation week on the US, okay, sorry, on the US stock indices, where we start to see almost all the index is actually trading negative. But if you compare their performance against the rest of the world, they actually outperform. Okay, as highlighted in green. Okay, you can see over here the column. So S&P 500 negative 0.6, Nasdaq negative 2.9. You have Dow Jones down close to 1%. The one that is underperforming is the Russell 2000 that has been underperforming for close to about a month and so. Why the reason? Because of this peak growth narrative that I tend to actually share with in my social media, my Twitter. All right. What's peak growth is actually basically indicating to us that last year the marginal benefits that is being contributed by global fiscal stimulus together with this ongoing loose monetary policy has starts to getting lesser as it's being triggered down towards the real economic data. So as you could see that PMI data from China is relatively weaker compared to 3 to 4 months ago. Very similar, we start to see consumer confidence in US start to dip as well for the month of July versus the prior months. So these are kind of a peak growth narrative that is causing a bit of nervousness or underperformance of small cap stocks, which is the Russell 2000, and as well as the Dow Jones Industrial Average, which we did mention earlier in our Q3 Global Markets Playbook, Q3 quarter three, at towards the end of June, where I highlighted that we are expecting this cyclical underperformance, which is actually in play right now, and I believe that it will continue to persist until the rest of Q3. Okay, then if I comparatively compare to the difference over its prior 4 week average, it's also slightly in consolidation phase as well. So the one that is faring the worst will be the Hang Seng Tech and the Hang Seng Index, the Hang Seng Tech. All these are driven by this ongoing regulatory overhang that is causing a kind of a negative feedback loop into the China-related stock market, which is the Hang Seng, and the Hang Seng Tech is one of them. So we have several significant weightage like Tencent and Alibaba inside the Hang Seng Index. So definitely Hang Seng Tech is all the China big tech stocks. So you could see last week it actually tumbled negative 10%. So that was last week, right? Was actually the second worst weekly performance since this ongoing downtrend that was started in February this year. That was the second worst weekly performance. So all in all, what we could see is that yes, it's getting very pretty much drastic. But what I posted over here in my social media post or what Twitter saying that we now reach to a stage that it's coming close to an extreme panic and fear scenario where any particular kind of regulation that was actually being provided as guidance earlier on 3 to 4 weeks and right now is being made to be more concrete, like into law or something like that. Like last Friday, you have this data privacy, consumer data privacy that the Chinese authorities kind of approved into law. But prior to last Friday approval, the regulators or the state media has already hinted that this is upcoming. So what we could see over here is pretty much very negative sentiment, close to fear and panic, where I think that we may reach to a point where at least we could see a potential mean reversion rebound at this juncture. Talking about bottom, because right now it's pretty much cheap in terms of their valuation, China big tech valuation, which translate to Hang Seng Index and Hang Seng Tech. Their valuation is relatively cheaper compared to the rest of the world. Bottoming formation yet is not so certain at this point in time. But however, in first step, there could be a potential mean reversion, at least a kind of a multi-week rebound that we could potentially see technically into this oversold territory. Okay, then now moving on to the Nikkei 225. Pretty interesting on the Nikkei 225 is last week we could see also a negative 3.45% decline. So Nikkei 225 is more primarily driven by this ongoing uh, situation in various states or cities in Japan, where they start to see a flare out in COVID-19 Delta variant cases again. So that causes a bit of negative sentiment into the market. Then for the German DAX over here is negative 1.86%. So this is primarily also driven by the US, where we start to see a bit of profit taking, especially that took shape on Wednesday, where we start to see the release of the US Federal Reserve Fed meeting minutes for July. So that meeting itself is also a bit overdone. Why do I say so? Because the minutes itself did actually point out that a significant portion of Fed officials has starting to prefer to kickstart the tempering, the QE tempering. That means, i.e., to reduce the quantum of bond purchases per month. So right now, the Federal Reserve is actually purchasing 120 billion bonds per month, split into treasury and this municipal bonds, split into it, aggregate 120. So they're actually advocating for a slowdown in the purchase of this. It could be 90, it could be 80. Yeah. But the thing is the timing. They want to kickstart before 2021 ends. So, but the funny thing is over here is that prior to the release of the Fed meeting, we have already seen that several key Federal Reserve officials have already sounded the guidance, saying that hey, we are in need to reduce the start kicking off QE tempering. So that could actually offer a bit of guidance to the market already. So therefore, right, what I suggest or what I think also is that even this coming Friday, which is the Jackson Hole Symposium, where Fed Chair will actually speak at 10 p.m. night Singapore time, it's also it may be a non-event as well because all this has already been priced into the market. But what's key over here is that what market hasn't been priced over here is the timing of the exact interest rate hike. So based on the Fed Watch, this called the Fed Watch interest rate futures on the Fed funds futures, in terms of relatively percentage, you have to see a higher percentage that's advocating for the first hike to come in either the July meeting next year or the September meeting next year. All right, so this is the timing that is being inferred by market participants. So, however, if the Fed Powell started to sound or hinted during the Jackson Hole symposium meeting or symposium speeches this Friday that he wants to bring forward the first Fed hike to the early part of 2021, 2022, that will actually create a negative feedback loop. All right, so this is the key thing we should watch out for. So I actually wrote an opinion piece on this as well, saying that the Fed, the Jackson Hole Symposium will be a non-event. You can actually read it up on my social media posts. All right. So now jumping very quickly into the S&P sector performance for last week. This is the 11 main sector that is made up of the S&P 500 index. So what we could see is that for sure is that the cyclical underperformance is still intact that we actually expected at the start of Q3 in my Q3 global market outlook team play or playbook. Industrials, financials, materials, energy all knock off smack down pretty badly last week, negative 2.2% to the range of negative 7% for energy. All right. So what's pretty much at the top will be a bit of defensive over here. And information technology managed to actually inch up positive last week at 0.44%. All right. So just give you guys a bit of head start. So for my this coming Q4 outlook, right, I'll be expecting a bit of switch, about tilt towards the defensive. All right. So till then, I'll actually explain more towards the end of September, where I share with you all in my Q4 global markets outlook. All right. Then now, some key economic data that we should watch out for 23rd of August and 27th of August. So the most important is that the market is anticipating this particular event, which is the Jackson Hole Symposium, 10 p.m. Friday time. That's Powell was speaking. So initially, right, it was actually to reduce any confusion is because uh, initially the event was planned as an in-person event from 26th of August to 28th of August instead. So right now, due to the heightened risk of COVID-19 in the US, so right now everything will be in virtual. Okay, so it's virtual. So it's a one-day virtual event on 27th of August. Okay, just to confirm with you guys. Then on Friday, definitely we have key economic US data as well, the PCE price index. So this is the index that the Fed watches to actually gauge inflationary pressure in US. 8:30 p.m. Together with definitely spending and personal income. So this actually made up close to two-thirds of the U.S. economy. All right, or more than a quarter, I would say. Okay, pardon me. So then you have ECB monetary policy minutes, 7:30 p.m. on Thursday. All these timing are Singapore timing. Then we also have a flash PMI data. So this morning we received the Aussie PMI data and the services, Aussie services and this Aussie manufacturing. So services actually contracted again below 50% for two consecutive months. I think that was the lowest for I think 14 months. All right. So this is all the peak growth narrative that we start to see earlier on in the market. All right. Then you have services PMI for Eurozone. All these are flash. That means preliminary. UK and US as well on Monday. So if we start to see this kind of data that's on the weaker side, preliminary PMI and service, because all these are leading economic data that will actually lead ahead of GDP growth. So if we start to see more peak growth narrative being intensified, right? Ask yourself, do you think will the Fed will be more inclined to actually turn hawkish? Okay, hawkish as in because don't forget monetary policy there's two tightening and loosening. You can have QE tapering, but you can still have a loose monetary policy by keeping interest rate low for a certain longer period of time. Okay, think about it. Okay, so this is a question that we traders and investors got to ponder around. Okay, now, earnings. So some key notable earnings for this week will be definitely one of the China big tech will be JD.com. This is listed on both on US and Hong Kong. So it will be today, Monday before the US market open. Okay. Then you have Best Buy, Salesforce. To the close of the week, you have Workday towards the end on Thursday after the market close. Then you have Peloton, that fanciful indoor bicycle we call it, okay, or high tech indoor bicycle at or training bicycle we call it, okay, up on Thursday after the market close. All right, so now let's jump straight to the technical chart that I'd like to share with you all. Okay, let's kickstart with one of the risk proxy or important risk proxy will be the US semiconductor ETF. So it actually consists of the key US key semiconductor stock listed on the US stock exchange. So what we could see over here is I want to highlight the last since it's all-time high on 5th of August. So close to 2 weeks, it has a kind of a decline, close to 2 week decline. So this decline, right, is roughly give or take, all right, 8%, which is pretty much normal given that we start to see it's been continuing to trade in a major uptrend since 18th of March 2020 low, which is holding above the 200-day moving average as well. Okay, over here. Now I think coming to add as a support at 423.60, which is our key medium-term pivotal support that we highlighted last week. So what we could see now out here is that, hey, that last Friday, it actually shaped a bullish reversal candle. Okay, this is what I call a bullish piercing. Okay, taking into these two candlestick, bullish piercing candle, right above the 423.60 medium term pivotal support, also right above the 100-day moving average and right above this major ascending channel support that is capping previous decline since October 2020 low. All right. So then if you look at the momentum wise actually is back off rebound right at this key significant support zone of the 43% and 37%. So all in all, I could see is that this medium term trend and major uptrend still remains intact for the semiconductor ETF. And what we could see last Friday's strong movement signify to us that, hey, we may start to see the end of this decline potentially and a resumption of or continuation of another potential impulsive uplift to actually take it to another fresh potential all-time high, we in this medium-term uptrend and major uptrend. So the next resistance level to watch will be at 495. All right. So what we could see is pretty much positive configuration on the semiconductor index, which actually translate to positive reading on risk-on behavior as well. So that's actually positive for the rest of the US major indices on the S&P 500 and the Nasdaq 100, but not much for the Russell 2000, which I believe that is still compressed in the sideways configuration for since the start of this year. Okay, so now very quickly going to the daily chart of the SPX 500. So what we could see over here is that this level, the which I already highlighted to your, or this line, this blue line, which is the 50-day moving average, is a pretty much crucial level that we got to watch. Why? Because it actually managed to shape a rebound every time it tested to it. 19th of July, 21st of June, 13th of June, 12th, 13th of May, then you have 25th of March. All right, this year. So it is very crucial level. So that's why last week I kind of tidy up the key support level or tighten it to 43.80, which actually it tested and shaped a V-shaped recovery. So all in all, what it means that, hey, there is no sign of the start of a medium-term downtrend yet. All right, so this medium-term uptrend that we've been advocating since 2 weeks or 3 weeks ago is still pretty much intact, with the next resistance level to watch at 46.30. That's the key resistance to signify that we are at the end of wave 3, bracket 3, where we could see a potential multi-week corrective decline. So that is the kind of a risk level at 46.30, the key risk level. RSI managed to actually bounce up close to the ascending channel, ascending support that is in place since the low of 2nd November, slightly above the 50%. And we still have a bit of room more to go before hitting the extreme overbought level at 77%. So all in all, what it means that medium-term upside momentum is also pretty much in support of further potential up movement on the SPX 500. Okay, now moving to this 4-hour chart. So that's our strategy chart. So no change in our strategy chart. So what we could see is last week it tested 4380. They have a daily close below it and shape a V-shaped rebound. All right, so all in all now is enrolling towards another fresh all-time high that I reckon it may take shape this week. So 45.40 will be the first resistance to watch. Above it should take us up to that risk level, which is 46.30, 46.60, that wave three, end of wave potential, end of medium term wave 3 target. So i.e. actually indicates to us the end of that medium term uptrend, potentially the terminal point where we could see the start of at least a multi-week corrective decline, not a major decline yet. Okay, a corrective decline from a multi-week perspective rather than a multi-month perspective. All right, so that's we have for the strategy on the SPX 500. No change on the key medium-term pivotal support to actually maintain our weekly bullish bias for this week. All right, heading towards 45.40. Above it should take us potentially to 46.30/46.60. Okay, now up next will be the tech-heavy Nasdaq 100 index. So similar, it's managed to help right above the 50-day MA, which managed to bounce out at 14,780. So that was our key medium-term pivotal support preset last week. So right now, do you see exactly it shaped that rebound? Okay, from here. So the next resistance level to watch will be at 16,630/16,830 level. Okay, that's the major level from here. So RSI also managed to rebound from this first significant support close to the 50% level. So indicating to us that medium-term upside momentum is still intact, which in turn supports a further potential up move from a weekly basis at this juncture. All right, strategy for this week on the Nasdaq 100. So no change on the key medium-term pivot support, which I have for last week, 14,780, which is also right at the ascending channel support. This is more of a shorter term ascending channel that is in place since 13th of May 2021 low. RSI 4-hour is pretty strong. Last Friday just broke above this descending resistance at the 56% level. So indicating to us that even short-term upside momentum has turned positive as well. So all in all, what we could see is a further potential push up to retest another all-time, to retest fresh, to actually potentially hit another fresh all-time high at 15,240/15,300. Above it should take us up to that risk level 15,600/ 15,630. So that could implies the potential end of that medium term uptrend, the terminal end, that where we could actually, we may see it, we may kickstart a multi-week kind of corrective decline. Okay, same thing like a SPX is a multi-week corrective decline, not a potential multi-month corrective decline yet. Okay, so till then, this is something I have in mind. That's the risk level 15,600 slash 15,630. So you were talking about from a trading perspective, once it hit that level, I got to be more cautious in my risk management, okay, in terms of position sizing or whatsoever. Okay, so this is something that I can, in terms of that I can share, or would like to share. All right, so now moving on next to the Hang Seng. So we all know that Hang Seng, right? Let's start with the weekly chart first. So weekly chart, right? Previously, we have this long-term key medium-term pivotal support at 25,760. So last week, it actually smacked down straight it, okay? And right now, it's coming very close to the long-term circular ascending trend line in place since the financial crisis low, which is October 2008 low. Now acting as a support at this zone, 23,980 slash 22,940. Okay, so what we could see now is the weekly RSI also coming very close to the support level that actually managed to hit that managed to kickstart previous significant rebound. All right, over here, there's a bounce. Over here, and right now it's coming very close to it. Hasn't reached yet, but coming very close. So what we could see right now, right, is a level that is in a land of middle of nowhere. Middle of nowhere. So right now, right, if I were to actually go now to the 4 hour chart, right? So from the 4 hour chart, what we could see now is the 4 hour RSI has shaped this bearish divergence, bullish divergence, pardon me, bullish divergence signal at the oversold region. So what it means that last Friday push down, right? This drastic 10% push down for the weekly 10% decline on last Friday could be a capitulation, at least a short-term capitulation, indicating to us that we are hitting a stage of extreme fear and panic where the decline, this decline since 18th of Feb, is a bit overstretched on the downside, where we may start to see a snapback rally increases at this juncture. So what we could have over here is that I also don't want to validate a further down move to actually target the next support at 23,980. What's 23,980 again? Will be this zone here. Okay, the zone that coincide with this long-term ascending trend line that is in place since the great financial crisis low, which is October 2008 low. So with that, right, I will rather turn neutral given that we have a positive element on the 4 hour RSI, neutral between 25,760 and 24,750. All right, this two low, this swing low that is managed to bounce off. So unless we have a 4 hour close above 25,760, then I could validate a more, I would say, higher probability mean revision rebound towards 26,750 slash 27,000. All right, so I'll kind of remain a neutral stance for the Hong Kong 50 index for this week. Okay, now moving on to the Japan 225 or the Nikkei 225. So what's interesting over here is that yes, Nikkei 225 last week has a kind of a relatively more worse week compared to the rest of the indices other than the Hong Kong 50 index. Is I want to share with you last week, right? Where it actually ended that low of 26,856 is actually right at the long-term pivotal support that we set up at the start of Q3, which is 26,880. Managed to shape a bounce off from there. So what it means that the long-term pivotal support holds, and this is where I may want to turn bullish again. Last week I was neutral because it's trading in the middle of the range. So right now it's already come down to the bottom of the range, which coincide with the long-term pivotal support at 26,883. So it makes feasible sense from a reward risk perspective to at least play a potential bounce if that happens. So let's go to the daily chart. So what you could see on the daily chart is it also give me the added confidence or added probability why there may be a potential bounce because of the RSI. If you look at the RSI has been shaping this bullish divergence since 8th of July. So that's close to close to about a month and a half or so already. Or close to July, about close to about a month, a month and a half, yeah. So it has been shaping higher low, whereas prices continue to dip lower. So all in all, what it means this decline over here since the start of 16th of Feb, right, is losing downside momentum. All right, so who knows? This could be the level where the price could actually shape a start of another impulsive move to break up from this kind of a descending range formation that is in place since 16th of Feb. But until then, it got to price action got to confirm first by a break of 28,860. Okay, but from a multi-week perspective, right, we know that 28,860 is the resistance to watch. But from 1 to 3 weeks, we could still play that, or we could see potentially see a good reward risk ratio on such potential rebound potentially. Yeah. So this give me the kind of a probability to actually turn from a neutral stance to actually flip to a bullish bias. And it gives me a good kind of reward risk ratio, holding above definitely 26,880, which is the medium term pivotal support I set for this week, as well as the long term pivotal support for Q3. As long as this level holds, we could potentially start to see a push up towards 28,250. Above it, should start to see the key resistance of 28,860. Like I mentioned earlier, is actually that resistance of this descending range, okay, descending complex range. Until this level breaks up, a daily close above it, then we could be more in terms of probability. Then it will be start to see more increased probability or to kickstart this new impulsive up move for the Japan 225. Okay, so till now we are just looking for a potential push up maximum towards 28,860 for this coming week. All right. So now quickly to the German 30 index. So German 30 index, right? Yes, last week also did a pretty scare, but where it stopped, right? It actually stopped right at the 50-day moving average, which actually formed two bullish signal. Hammer on the 19th of August and hammer on last Friday. All right, pretty positive. And also the lower boundary of this ascending channel that is in place since 19th of March. All right, and it's all managed to bounce off from 15,810, 15,810 and 15,700, which we defined last week as our key support level to watch. All right, so no change in our strategy. So what we have over here is 15,000, 15,420, a bit of slightly below 15,700. This will be my key medium term pivotal support that I have, which is, yeah, this is level. I maintain it. So still looking for a potential push up to actually test this next resistance at 16,070, 16,200. Above this level should take us up potentially higher to 16,530 slash 16,850. All right. So I've covered across the globe in the major US major stock indices that I would like to highlight for you all, from US all the way up to the German 30 index. So what we could see overall is all of them are managed to help above their key medium-term pivotal support. And what's interesting over here is the Japan Nikkei 225, it managed to bounce off for a long-term pivotal support level last week, held above there. Okay, and for Hang Seng Index or the Hong Kong 50 Index, it's a bit mixed right now. Because short-term technical indicators indicating to us that the ongoing the decline that we start to see February this year has reached to a tipping point where it's being overstretched, where we could see a mean reversion rebound that is coming into play. All right. So with that, have a great trading week ahead, and I see you all in my next video.